Welcome back to the channel, guys. Today we are going to be looking at the market analysis on the DXY, the USD index, EURUSD, and GBPUSD. Time permitted, we might probably take a quick look at gold and what the gold is telling us. Now, kindly note that as we conduct this analysis, right, it should not be taken as a form of signal, but more of educational, where you get to learn how to analyze the market and then place trades on your own. When it comes to placing trades, note that you need to always ensure that your risk management is up to date. Okay, great. So if you're new to the channel, don't forget to hit the subscribe button, turn on the notification bell, and give the video a thumbs up. So this is the DXY right in front of us. Before we even dive into the DXY, let's take a look at the calendar that we have for this week. Yesterday, Monday, 27th, we just had for the JPY. We didn't have any forecast or previous whatsoever. And then today, Tuesday, May 28th, by 3 p.m. UK time, we have for the USD, the consumer confidence. Now, by the way, this happens to be the last week of the month of May. I repeat, the last week of the month of May, right? And that is something that is significant when it comes to trading. It will be good for you to take note of things that usually happen at the beginning of the day or beginning of the week or beginning of the month, even beginning of the year, and also at the end of the day, at the end of the week, at the end of the month, and also at the end of the year. There's a similarity based on the price action. So later on for the rest of the week, we have some news, but if you look very well, based on the high impact news that we have here, based on the red, it isn't looking that volatile, that explosive, more or less, right? Just keep in mind with respect to that. But at the same time, also note that in the market, anything can happen at any point in time. So the DXY, this is what we have right in front of us. And for me, based on what I would like to see this USD do, based on these levels that we have here that have acted as support and a bit of resistance, support again here, I would like to see the price pull back to this area here, which should act as resistance. Price now has gotten to this floor, has more or less gotten to this floors of support. There's still a little bit of room here, so you might as well drop a bit more. I'd like to see price ultimately get to this resistance, and then we get a possible trigger. Don't forget our art, A for area of interest, R for reaction at the area of interest, and then T, the trigger that we use for our entry. So I would like to find a nice trigger here that will get us in at this point here, and then we'll take it down back to the lows here and a possible break, retest, and then continue to drop for the DXY. Now, I'm looking at this based on this fresh major move to the downside. This here is a fresh major move. So I like to follow this wave and not this one. This one has already completed its own to the upside. So this is a fresh one for me based on my eyes, based on my analysis. And I like to see it continue to the downside. Now, if this is the case, then we should expect the likes of EURUSD, right? If this is the case, then we should expect the likes of EURUSD. Let's just pop into the EURUSD. The EURUSD to do the opposite. As we're expecting the DXY to do what? The DXY to drop ultimately after a pullback. The same thing here as well for the EURUSD. We're expecting a pullback to these areas here where we have support, some support here as well, as you can see, and then pullback here. And then we get our entry based on our trigger to buy, and then take it back to these highs over here and possibly break out, pull back, and then continue to push higher as well. Very similar scenario to the DXY. Of course, I already stated, and I'm sure you must have already observed, that the DXY and the EURUSD, they tend to move in opposite directions, right? There's a correlation, a high correlation between the EURUSD and the DXY. And then when we talk about the GBPUSD, also known as the cable, we have something similar as well. You can see that this instruments that we're looking at, these currency pairs we're looking at, the EURUSD and the GBPUSD, they have a lot of similarities with respect to the DXY, and that is what we're going to be taking advantage of. You don't need to trade too many instruments. You don't need to be switching time frames up and down. You notice that it's just majorly the 1 hour time frame we have been looking at, right? From time to time, I could tend to switch over to the 4 hours or even the daily to find out what's happening. And depending on your style of trading, your style of entry, you can as well drop down to maybe the 5 minutes or the 15 minutes time frame. Why? To get a tighter stop loss. And of course, for the same take profit reward from the 4 hours daily or even the hourly time frame where you did your original analysis from. The advantage of that, the major advantage of that is that you'll be able to increase your reward, right? So instead of doing like a 1-to-1 or 1-to-2, you might probably be having like a 1-to-5 or if not even more at the end of the day, right? Now, let's see if we can quickly pop over to gold. And don't forget, the DXY should be going down. So what do you think about the gold, the XAU USD? If you are thinking the same way we are, then you should be expecting a pullback here and a push higher as well. We pushed higher and we stopped here because we have this, and this here to the left-hand side. When you're looking at your areas of interest, it's always advisable to look to the left-hand side. Left-hand side will give you clues on the bounces. This is the bounces that will help us to know that yes, that area, not a price point, that area is a valid area. And then we look for the reaction at that area, and then we look for our trigger. So these are the instruments that we are paying attention to for today and most likely for the rest of the week. I am yet to get any trading, any position, but most times I start trading on Tuesday. So Mondays, I don't really look at the market, only if I have to like take a class or probably do a chart for someone. My trading just started today, more or less, and I am yet to get any entry, but I have now shown you the potentials that I am looking out for, right? So always ensure, even though, as I said, it's not a signal, even though you're going to be probably taking a trade, make sure you know where you're going to set your stop loss, know what your volume, your lot size is going to be based on your account balance. We have over here a position size calculator on the school, the trading school that we have. The link will be in the description as well. You can take advantage of this, just punch in your account balance, your risk, and the rest, and then it automatically does the calculation for you, right? So area of interest, reaction, and then the trigger, very key. The art of trading is what we use, and it's well simplified for anybody to understand. Once you can break it down into 1, 2, 3, 1, the area of interest, 2, the reaction, and then 3, the trigger, you are well on your way to understanding the market and being in sync with the market, and then following the directional bias in order to take advantage. With that said, I want to say thank you guys for joining us. That's indeed been a good one on the market analysis for today. Ensure to protect your account accordingly. If you have any questions, use the comment section below. If you are new to the channel, hit the subscribe button and turn on the notification bell. Give the video a thumbs up as well. Thank you guys, and catch you same time at another time. Cheers.